Hello, welcome back to another episode of the Collective Clicks podcast. This is your host, Brandon Bateman, and today I'm going to be interviewing Laz Perez, who is a client that's been working with us off and on for about 18 months. We're going to talk about all kinds of different things like leading metrics versus lagging metrics, how to know what's a shiny object in your business versus something that is an actual good initiative to implement. So please join us for the conversation, and we'll talk about all kinds of different things that'll help you be successful in your business and with digital marketing. Hello, everybody. I'm here today with Laz Perez. How you doing, Laz?
I'm doing great, Brandon. How are you?
Hey, doing awesome. Thank you. Happy to hear that you're doing well. How's business and life treating you in this crazy season? As we're recording this, it's December 13th. Sure seems to me like the entire real estate investing world has slowed down. I don't know if that's true for you.
Yeah, no, that definitely is true. I would say this week is it's hit week. The realization that it's that time of the year, which is bittersweet, right? But it's as a whole, I will say, if we're talking about markets as a whole, I'm very thankful to be in Florida because things have continued to move here. Very optimistic of where things are going. But yeah, I guess at some point you have to sit back and relax and enjoy that it's Christmas and so forth. A little hard for me, but yeah, it's happening.
Yeah, absolutely. I want to dig into something you said a little bit. You said I'm optimistic about where things are going. I'm super curious to hear about that, just because there's so much, I guess you could say, mix between pessimism in the market right now, and then also some optimism. What exactly is it that you're an optimist about?
Well, I think the more I've grown the business is the more that, and that's obviously a continuing thing. The more you realize how many tweaks you can make as a company internally to control your margin, right? So whether that's implementing novations, whether that's implementing a process to do owner financing. I think early on in the beginning, you have this fear of like, how am I even going to find houses at 60% below market value, right? Are these people going to run out, right? Like that's the initial mentality. And then once you get over that and you understand that there's an abundance of opportunity, it really becomes more, what can you control? And the reality is there's just so much that we can control to operate our companies at a really high level.
Understood. Okay, so if I'm understanding this right, you're looking into your business and you're basically saying, regardless of what's happening in the market right now or any macro level situation, you're almost excited when you see that you're not doing something as well as you could be, because that shows that you have room for growth. And you think a lot of the benefit over the next year, for example, is going to come through you dialing in your team more.
100%, Brandon. Yeah, I mean, that's what gets me going. Like at the end of the day, like I love to problem solve. And there's so much opportunity to solve. Yeah, I just think there's so much there. You can also talk about, there's been a lot of people who have entered our space kind of as fly-by-nights, and there's nothing against that. I respect hustlers, but you look at where we're heading and you really you can really see that, that those that know how to operate and are continuing to find ways to better operate are going to find the light at the end of that tunnel. I'm so confident about that.
Yeah. Okay. That's awesome. I love the optimism around all that. I love the attitude too. I think I'm too pessimistic as a person. Like anytime I see that when as a company, we're not doing something as well as we should be, then I guess you could say I'm more upset about it than I am optimistic about how well that means that we can grow. This is a horrible parallel for anybody that doesn't know marketing well, but I think of it like there's this metric in Google. I think we may have talked about it going through your account before, Laz. It's called impression share. It basically shows what percentage of the time are you showing up out of the times that you're eligible. Think of it like a percentage market share or something like that. Mm-hmm. And sometimes we have clients that look at that number, and when it's high, they say that's good. Like that's the goal, is to have that number high. But what I always try to explain to clients, but I don't actually act this way in my own business, is for that number to be low is actually the best thing that could possibly happen, because you've already gotten whatever result you're getting, right? So let's just say you're getting 2 deals a month. The best case scenario is that that's less than 10% of what you could be getting. The worst case scenario would be that's all you can get, right? So it's kind of the perspective of basically the lacking there, showing potential for future improvement. I think is really interesting. So for everybody listening that doesn't know you, obviously we know each other fairly well, but could you share a little bit about like your story, like when did you get into this business, and what is it that you focus on? I know you mentioned like novations and wholesale and stuff like that, all that kind of stuff.
Absolutely. So I've been in the wholesale space. My first year's job out of college, about 6 years now, 7 years now. Initially, I was working for another operator, and that was more of a time where there was REOs. So I was doing a lot of the bank-owned auction stuff, Hubzu, Zone.com, Auction.com, websites that feel like they've gone extinct at this time, but they used to be huge. They used to be a huge source for deals. I saw that transition out. So I saw those deals start to just slowly and slowly just evaporate from the market. And then from there, I said, hey, I'm going to go kind of just do something myself and go fix and flip properties. Because at the time we were wholesaling, and I was just consumed by, well, the guys I'm wholesaling these houses to, they're making so much money. So let me go fix and flip, right? I realized real quickly that I have no idea how to fix and flip. And that I needed to create some form of sustainability. I needed to create something that can consistently bring in deals. So that's kind of why I got back into the business as a wholesaler. I've been wholesaling now through my own company for 3 years. We wholesale primarily. We fix and flip. In these times, these current markets, we're wholesaling more than we're fix and flipping, just because we want to move things a little quicker. We do have some rentals as well. But that's it. We've done all the strategies. We do novations now. That's something we've definitely taken on this year. It's definitely added value to our business. And yeah, that's kind of what my story to get to where we are here. In regards to company size, I have 2 business partners, Mel, and Javier. We hover anywhere about 10 to 12 deals a month, really trying to break through to kind of get to the 15 plus number. That's it. That's pretty much where we're at.
Awesome. And you mentioned Florida before. So do you, and if I remember right, you target a lot of Florida and then also some of Georgia, right?
That's correct. Mostly Florida, because Florida is just such a beast when it comes to so many different counties you can attack.
Mm-hmm.
Greater Atlanta is kind of where we'll go outside of Florida if we're anywhere else. That kind of started more because there was such a big wave of iBuyers buying in those markets that we were just like, let's get in. We're still selling a lot, not a lot, excuse me. We're still selling some in Greater Atlanta, but the vast majority of our business now is in Florida.
Okay, very cool. And I'm assuming, just based on the spread there of different locations, that you do most of what you do virtually.
Totally virtually. I always joke, like we're in Collective Genius. I didn't even realize so many people did appointment based businesses until I got into Collective Genius. I thought everybody was virtual. Then they told kind of me like, no, that's the new wave. And I was like, really? Because I mean, that's just what I've always known. I think most people in Florida are fully virtual. The way I view that is, I think mostly I've noticed that people who are appointment based are usually those that are in markets where they're diving really deep into one market to create those higher conversions. But for myself, I'm fully virtual.
Mm-hmm. Yeah, a little bit of a different model. So let's talk about marketing, lead gen. Like, what do you do there?
Yeah, so cold call marketing is been our bread and butter for quite a while. From that source, we're really just buying a ton of data, sending it out to a third party, and then they're converting the leads that they can convert. We do direct mail. That direct mail is more hyper focused on real good data. Authentic is who we use. And then we also do the PPC, of course, with Brandon Bateman. That's definitely still in the early stages, but very excited to see how that is changing our business just from a speed standpoint. And we do some SMS. The SMS is similar to the cold call, where it's just a lot, and there's a lot of work that goes into that because there's so many leads that are coming into your CRM, which involves a lot of work. There's an ROI there, but it's just a lot of work. So as a whole, our marketing sources are PPC, direct mail, cold call, SMS, and we do actually a little bit of need to sell my house fast as well.
Okay, very cool. I'm really curious to hear, just because obviously like the cold call, direct mail, that kind of stuff is sort of the baseline for you guys. And PPC, I think we're like 2 months into it, something like that.
Mm-hmm.
So not super deep, although worth noting that we've also done Facebook ads for some time. So that's why you and I know each other more than 2 months worth is from
Sure.
that experience in the past. But first impressions on like the type of lead from PPC compared to those other channels, what would you say?
Uh, there's a lot more. There's more distress. We can absolutely start there. But more than anything, it's just the importance of speed when you're dealing with these people. Just making sure you're calling them as fast as you absolutely can, making sure you're triple calling them, making sure you're really kind of going above and beyond for their needs. I've noticed already with the PPC leads, a lot of it is, hey, I will do this, but I need some money to fund my U-Haul, because without the money for the U-Haul, I can't sell you the house. So it's a lot of problem solving and recognizing that you need to be willing to go above and beyond to solve their problems.
Yeah, understood. Speed definitely is a different factor. You mentioned triple calling. For anybody that's not familiar with that, what does that mean exactly?
It just simply means if you call them and they don't answer, call them again. So the way we look at it is we have gross touches and unique touches, right? So for our team, it's usually 3 gross touches a day, which is really 9 unique touches. Or I said that wrong. 9 gross touches, 3 unique touches, right? So that would mean essentially, if I'm calling a lead that day, that's 2 phone calls and an SMS message. That's 1 touch, right? So that's the level of follow up that you need to have to get these people on the phone. Because at the end of the day, the reality is the following: if they're filling out your web form, they're filling out probably 2 more, and there's nothing special, you know what I mean, about your web form that's gonna say, hey, no, I'm gonna wait for Laz, you know. So you really have to go above and beyond with these people.
Yeah, understood. Okay, so if I'm understanding you right, if I call someone twice right away and then I text them, that's like 1 unique touch because that happened all at once, right?
Correct.
And but I might do that same thing 3 times today.
Yeah, in our company, you have to do that 3 times in a day.
How long do you do that for? Because I would assume that once the lead's like hasn't responded for a year, you're still probably not doing
No,
the 3.
no. Yeah. No, so that has a 7-day period. After that 7-day period, the lead it automatically converts into what we call an attempted to, which would then go into our dialers, and then our lead managers are then continuing to touch those people. They're continuing to run through those lists. Right?
Understood. Okay. So really heavy for 7 days. And then it's probably closer to 1 touch a day after that with your process or something like that.
That's fair.
Mm-hmm. And then it kicks it back up to acquisitions if they find something good. I'm assuming.
100%.
Got it. Okay, cool. That's super helpful to know. So urgency is key. And it's, I haven't heard that before. Gross touches versus unique touches. I think that's a really interesting concept. Very cool. So diving into this a little bit more, what else? So it sounds like you're pretty passionate about that. Is there anything that you'd say you're also passionate about in terms of like, you think other investors are just seeing this wrong, or they're not, they could be having more success if they viewed it differently? Like, what would you attribute your success to? Like, what is it that you're doing uniquely?
I think it's a combination of things. I think another important thing is behavior before results, primarily early on, right? So a lot of people probably come to you and they're like, hey, it's month 2, where's my ROI? That doesn't matter yet. What's your cost per lead? What's your cost per interested lead? How many contracts have you had the opportunity to send out? So I think a lot of people are too quick to go from behavior to result because they don't understand some of the conversion cycles, right? And I'm not going to sit here and say like I have my conversion cycles dialed in where I know exactly how long a direct mail lead takes. But the reality is it takes time. And really, depending on the marketing source, it based off the marketing source is how long. Every marketing source is different, right? So I'll use direct mail as an example because direct mail really was the one that gave me like the aha moment. It took us 6 months with direct mail to get back to a break even, right? From month 6 to month 9, we got to a 300% return, right? From as a whole, right? Now we're finishing the year. We're about to finish close to about I think 400%, 4x ROI, right? And there's just so much room for that to continue to grow because there's so many people who have had my postcards who are going to continue to call me that's just essentially going to be not free money, but money that's already been factored into the cost. So understanding that things take time and the focus needs to be on the behavior, not the result early on.
That is, I haven't heard anybody say that specifically, like behavior instead of result. That's really interesting. What I tell our clients sometimes is at the very beginning, you don't want to look at how many tails you get on your coin. You want to look at how many times did you flip the coin, right? Because it's kind of like the leading, like in your words, that would be the behavior, right?
Mm-hmm.
And then there's some probability there that it turns into a tails or not, but you don't know that, and just because you flipped it twice and didn't get a tails doesn't mean your coin's broken, right? It can take a minute. Yeah, that's super interesting. So it's that concept of leading metrics and lagging metrics. So you said that different channels are different marketing channels are different for how long they might take to ramp up. I'm curious to hear your perspective there, just with all the different channels you've done. How would you compare them and where would you say they fall on that scale?
Is that like in order of which ones I like to dislike? Is that like
I guess this probably correlates really well with how much you like or dislike them, but specifically how you were saying that the amount of ramp up time varies by channel. I'm very curious to hear which channels you consider to be like the quick ramp up channels,
okay,
and which ones you consider to be the long ramp up channels.
Sure. So I would add SMS is a quick, super quick. I would say cold call. I think SMS is the quickest for sure.
Mm-hmm.
I think cold call is kind of there as well. The PPC, I'm sorry, the way I'm looking at it is the easiest to get into, the lowest barrier of entrance, right?
Mm-hmm.
Not from the speed to which you get the deal, because if it was speed to which you get the deal, it's PPC, right? When it comes to lead comes in, lead got closed, it's PPC, like it is, right?
I think you had like 3 of them in your first like month or so on PPC, right? 3 contracts or something like that. So it turned around pretty quick.
Yeah, exactly. And I am talking with a small sample size, but I can already tell based off the stress levels that come in, it's PPC. Now, if the question was to be looked at from which is the one that is the easiest to get into and it'll get you a win early on if you're just getting in, I would look at something more like SMS or cold call. Just because those things don't require you to have to follow up at such a high level, and you could still get some wins. So when you look at something like PPC or direct mail, do I think they're the most scalable? Absolutely. Like there's just no question. But they're also the ones that demand the most from your team, right? Because obviously there's a cost per lead that's significantly higher. And so you just need to be ready to operate your team at a really high level if you're going to be going into these things, right? So that's, I think, the way I look at it. So on one side, you have what's easiest to get into. On the other hand, you have what's easiest to scale. But what's easiest to scale requires more from you as an operator.
Mm-hmm. And I love the way you said that, because I've talked to some other people that have kind of a conflicting view to what you said that I don't agree with as much, where they say like these PPC leads are so motivated, like you have to be an idiot to not be able to close these leads.
No.
Or it's super simple, which it's like, I don't view it that way, because the fact that they can be closed at a higher rate doesn't mean that they will be closed by any team at a higher rate.
Yeah, I disagree with that because there's higher stakes, right? There's less room for error. And if there's less room for error, like you need to be better at what you're doing. So I get it. I can see the perspective that is, well, it's easier once you get a good one. Yeah, but if you mess up on that good one, it could be the world of a difference from an ROI standpoint.
Yeah, absolutely. You don't get as many reps, basically. You have less chances to make it work properly. And mistakes are expensive versus 100%. Cold call mistakes, not quite as expensive.
Yeah, like I could tell you, like I can have early on, if I had an acquisition agent be like, oh yeah, we missed out on this cold call lead. I would get upset, but then I would look at the ROI and it didn't drastically change whether I should or should not do cold call, right? If you drop the ball on 2 leads that were whether you that you could have closed on a direct mail standpoint, that is the difference between your campaign being successful and not being successful.
Yeah, absolutely understood. That's super interesting. Cool. Any other notes on that? What you think will help you be successful with PPC, or what you've seen in the past there?
Um, I guess just training your team to be willing to go above and beyond, right? A lot of these people, like I said, they're, "Oh, I mean, I would sell, but where do I go? How do I, and I have a place, but I don't know. Well, what if I gave you the money for the U-Haul? The solution might be that easy, but you're just like, well, contract guy, you know what I mean? You're just thinking like a caveman. So you have to go above and beyond.
I hope that's still a little bit more sophisticated than a caveman, but I guess I don't
Yeah.
know. I don't know the details.
Yeah.
I'm actually super curious to hear, because so far, with your lead conversion has been really good. I do think it's a small sample size, but one thing that some of our clients really struggle with are clients that are really heavily driven by channels like cold call before they start working with us. They tend to have the lowest close rates on PPC leads just because they're so different. And we do run into friction with that sometimes, because there can be people that have even a lot of success with cold call, where they think like, well, my team must be good because we just closed 15 deals last month with cold call. So obviously we know what we're doing. We just can't close these PPC leads. But they statistically just don't do that great with closing compared to some of our clients that are more inbound focused overall. I'm really curious to hear how because obviously as a business owner, to understand it, that your team has to understand to pay for the U-Haul. Easy, right? You get it, you see it. But when it comes to like steering a ship and getting everybody on the same page, and not just training them, but having them actually perform on that level, it can be kind of hard if that's not what they're used to. What have you done to kind of bridge that gap?
Yeah. So I think the first part to that is, if a company is doing a lot of cold call, my first question there is, how efficient are they managing their cold call marketing? Because that can really burn out a sales team. So that's the first place I would want to. That's the first question I would have, right? So because when my team was just doing cold call, a ton of cold call before we had lead managers, they were fried, right? So they would grab a lead and they would already be coming from a place of negativity because they were just exhausted, right? So I think the first part is, you have to have a team that you have to be running your team at a very as efficiently as possible, so that when they do get a PPC lead, they treat it like this is the most important thing I've got in my life, because that's the level of energy you need to go into with these leads. So I think the biggest issue there is their mindset, when they're claiming the lead before they even call the lead, I think is the biggest issue.
Okay, so if I'm understanding you right, when you started giving your cold call team, or I'm sorry, you started giving your acquisitions managers a little bit more pre-vetted of leads from the cold call side, then that helps you with inbound channels too, because they don't have this gigantic discrepancy of they're used to just drowning in all these poor quality leads every day. It's easier to focus and give all that attention if you don't have way too many leads to do that with.
Absolutely. Absolutely. Thank you for simplifying the things that take me way too long to explain, but absolutely, that's like 100% spot on.
Yeah, it's super helpful, honestly, to see it, just and to understand how that's working for you. That's something I'm curious to ask some of our clients, like how they're doing it with the cold call team, and what goes to acquisitions. Cause it's hard, like we sometimes work with these companies that are generating hundreds of cold call leads a day. And then you throw like 2 PPC leads into the mix. It's so easy for them to drown in
Hmm.
the sea of everything that's bad. Right. I think that belief is really important. One thing that we've done is we like I've interviewed all the acquisitions team of many of our highest performing clients from performance standpoint, because I know everybody says that they're like good at closing, right?
Yeah.
It's just the thing that investors say. But some of our clients statistically just close really really high on PPC leads, and others just don't. So I've interviewed like the teams of a lot of them, and one of the things that I gathered from them, it's so hard to put it into data because there's no real way to like measure this. But I picture those people that were closing at a really high rate, like the gamblers that are that are going to Vegas and they just lost 100 grand, but now they're going back because they think like this next time's the time, like I'm going to win this time. Like they just
Hmm.
have like this level of optimism with leads that's just like completely illogical, right? Every single lead that comes in, they just believe like that's the one, that's going to be the deal. Because if you don't, the problem is if someone's too logical, like I would be a horrible acquisitions manager because I'm so logical. I look at every lead, like there's a 90% chance that's not a deal. But if you look at it like that, when you do get that 1 in 10 leads, that's going to be a deal. You don't actually make it become a deal because you didn't believe that it could be a deal. So that's why I thought was so interesting, is just that ability for them to like handle that rejection. But they like, that's one of the things that they talked about the most, was how excited they were for PPC leads and how they just knew they were going to be the best deals.
That's yeah, like that's spot on. It's just the truth at the end of the day. We always tell our guys here, like, do not read the notes. Like sometimes when a lead comes in, let me comp the house. How long have they owned the house? What was their previous mortgage for? It's like, call the lead. Do not create an assumption of what the situation is going to be. You could have already had them on the phone and really known the true story, but you've been comping the house for the last 3 minutes, right? So back to what you're saying, absolutely. Like, you need to go into there with a positive mindset and not create an assumption of the situation.
Mm-hmm. Yeah, it takes a special person. It's
Yeah,
almost to the
easier said
extent
than
that
done.
I've
I hear you.
considered. Yeah, I've even considered taking, like, I like a lot of the questions that we have in our forms that we gather from leads, but I've considered taking so many of those off, not because they're not good or they don't work from a marketing perspective, but I think they lead people astray, right? Like we ask a
Yeah.
seller how, what price were they thinking for their house or something like that. And we see like too many of our clients are just disqualifying leads based on that information. Whereas it's really helpful to like be helpful information. But if you just are immediately thinking that the price isn't going to be right, you're probably going to make that true.
Yeah. And another part to that is, the cure to that is competition. When you have a team that they know the other guy is going to take the lead while I'm reading the lead, he's going to stop reading the lead eventually. Because he knows by the time he takes reading the lead, somebody else is already calling. He's like, shit, this one was actually good. Well, the other guy already got it because he didn't care whether it was good or bad. Make sense? So
Mm-hmm.
understand, creating that competitive environment is so important. It is what removes those assumptions, because there's no time for that. Does that make sense?
Yeah, that's interesting. So you do just like a free for all with your leads. Lead comes in, whoever gets to it first, it's theirs, or is it whoever contacts the person first?
Incoming web forms. So, okay, a great question. Uh, we allow incoming web forms. It's first come, first serve. Uh, we allow them to claim the lead, which I know there's a lot of people who say, hey, that lead is owned by the company, not anyone, until they get that person on the phone. And to an extent, I agree with that. But the way we operate is we allow them to claim the lead. However, they need to go through the follow-up process that we talked about early on a daily basis. Our team, Mel, is managing that on the back end. He is reviewing that from a quality assurance standpoint every day at the end of the day. And if he sees anything, if he sees a lead that they're not going through the follow-up process correctly with, he'll throw it back in a free-for-all bucket.
Well, there's some incentive. Yeah. So is that how you keep them accountable? Basically, is you lose your leads if you don't manage them the way we want you to?
Yeah, I mean, that could happen. It does not happen often, because we'll tell them, hey, why didn't you follow up with this one? Okay, no. So we try to work with them so that we are not creating this environment where we're just pulling things from people. But at the end of the day, we don't have to. We don't have to. They're following up with their leads at a really high level, because they understand that's the way they eat. And they're not, since we have now lead managers, they're not being overwhelmed with the amount of leads that they're taking. So they have no excuse to not be hitting their leads at a really high level. That makes sense.
Yeah, absolutely. That totally makes sense. It's about controlling the number of leads. What I've heard from some of our clients is you can't listen to them, because acquisitions managers, they always say they want better quality leads and more of them. Right. But if you listen to them too much, then you overwhelm them with leads, or maybe they're not overwhelmed, but they get to cherry pick a little bit more. Right. It sounds like you keep like a level of lead flow that allows them to do the process properly.
100%. It's a combination of both, because I do listen to them when they were saying, hey, like, why I shouldn't be calling leads that are asking the retail on their price. So I do listen to them, and that's what has led to us getting lead managers, right? But on the flip side of that, I agree with you, where you can't be like, hey guys, like, you can't freak out and buy five different markets in Audantic because they're telling you that your leads aren't good and you're freaking out, and then you're not utilizing the data. So like, it's a combination of both. But I agree, you do have to trust your process, and not just run and make a decision every time an acquisition manager tells you, oh, leads suck.
Yeah, fair enough. So for anybody listening, to clarify things, I think the way that Laz has it set up here is really interesting, and it's one of a few ways we see really work well. What I like about what you did, Laz, is you still have the free for all component, right? Anybody can take the lead, but when they have it and it's theirs. And I think the advantage to that is accountability, because there's one person who's responsible for that, right? And you say that you have that accountability piece of making sure that they're following up with the leads according to your number of gross touches and unique touches and all that kind of stuff, right? Which I think is awesome. The other way that works is to have it be a free for all, and until someone gets in contact with the seller. So even though you just called the lead, now I can call the lead. And if they answer the phone for me, then it's my lead. And that means that everybody can go. But the problem that some of our clients run into with that is there's not really any accountability, because if it's everybody's leads, then it's nobody's lead, and there's nobody actually responsible for that number of touches and things like that. So we have clients doing really well with both of those methods. I think catching the in-between is not good, like where you do round robin, or you even do a free for all and someone can claim the lead, but then you don't have accountability around their follow-up process. Because the real advantage of that process is I think it allows accountability to potentially happen versus the pure free for all. There is, you can see if you're hitting the metrics on an overall basis, but you can't otherwise. But anyways, what I would recommend, I'm curious if you'd fall in line with this recommendation, Laz, is maybe start with the free for all overall and then measure how the touches are going. And if you need some accountability because the touches aren't happening right, then you can have the claiming of lead feature, kind of like you guys do. Or you could start the other direction, I guess, just based on how you're doing it with other channels.
I think going the route of a free for all, and until somebody gets them on the phone, they claim it. I think it's a safer bet because it's getting touched by more than one person. So I think that's not a bad place to start. And in theory, I love that idea. It's just kind of something that for us we haven't implemented because we're just one of those things that we were accustomed to doing in a certain way. So we decided to better the way we were doing it, to change it as a whole. But I like both. And you're spot on that the worst thing to do is be somewhere in the middle, because that just leads to things falling through the cracks. And usually when things fall through the cracks, you don't realize them until it's too late.
Yep, absolutely understood. Well, that's super insightful. One other thing that I wanted to talk with you about is Facebook ads. I know we had some experience together with that in the past. A little bit of context for everybody. Laz and I, we worked together doing Facebook ads. What was it, like a year ago? Maybe
yeah,
even a little bit longer.
A little more than that.
Yeah, maybe 18 months. Long enough that neither of us remember it very well. And then we restarted with some PPC recently. But what I mostly remember about this is that your impression was for Facebook ads, you needed some changes in your team. I remember there was a point where we were looking at it and you're just like, it's just not working out. But then when we talked more recently, you said that you looked back and the return was actually really good. But there was maybe some issues with your process for handling that type of lead. For everybody's reference, Facebook ads is a channel that notoriously has a lower lead quality than PPC, although it really depends on the market. So don't dig too much into that, because in some markets we even have better lead quality with Facebook ads than PPC. But I guess this could apply to like any digital marketing channel that has a lower lead quality, like Facebook ads had for you in Florida. You want to share a little bit about that experience?
Yeah, totally. It goes back to like efficiency. There's a cost to be efficient, right? And that cost is usually a no-brainer. But it goes back to, I had all my acquisition managers at the time taking all the cold call leads, right? And then here comes something that I added on top that was a little more expensive from a cost per lead standpoint, but not overwhelmingly more expensive, because from what I recall, our cost per lead was pretty good actually from a Facebook standpoint. But they viewed it at, oh, here's just another lead that I have to deal with, right? Here's just another lead. So their mindset was incorrect. Now, early on, it's easy. Early on in the business, here's me saying, guys, your mindset needs to get better. Your mindset needs to get better. Easier said than done, right? Because I'm not in their shoe. But when I actually stepped back and looked at it from their perspective, and I said, man, I'm having these guys go through 55 leads a week, right? They're burnt out, right? So I think it goes back to, you need to have people in place to, you need to have lead managers. You need to have follow-up specialists. You need to have people who can help create efficiency for your business so that your team doesn't get burnt out. Because when you are burning out your team, it's easy to just blame it on something else. So that is literally what happened with Facebook, where it was like, hey, granted, some of these leads are great, but there's a lot of them that suck. That was kind of what was happening for us, right? Ultimately, the ROI was there, right? But I was looking at it from a result, not behavior standpoint, once again, right? And I was blinded by the fact that I didn't have enough efficiency in my business to make the right call.
Yeah, that does make sense, and I get why your team would feel burnt out. What was the return when you ended up looking back at it? I remember it was pretty good. I don't remember what it was. Something
Right,
where
it was up there. I think it's like 8. It's an 8x. I think. Let me see.
that's the number I had in my head too. So
Yeah, let me see.
I think it's because you told me that before.
Yeah, I'm pretty sure it was 8x. It was 8x or a little bit better, but it was 8x. We'll call it.
Yeah, that's which is and it was decent sample size too. That was like 6 months plus of ads. So anyways, that's why I thought that was so interesting, because the return was so good. But I don't think you realized that the return was that good at that point, or maybe some of it came over time.
That's another part. It comes over time, right? So it's it literally like that. It like same thing as direct mail. It came over time. Now I look back and I go, man, look at this, you know. But now you've stopped it for 4 months and you have zero momentum, right? And now you have to literally start all over just because you didn't trust the process, right? And you can only trust the process if you're running a very efficient business, right? So it just, to me, it's all a circle, you know?
Yeah. But I get it. Like if in the time, like I think someone can make this mistake with any marketing channel, right? You're early on in it, so you haven't given enough time for the results to come. And then you're just kind of reacting to what your team's telling you, like, oh, this lead wasn't good, this lead was bad, you know, all that kind of stuff. And it can look like everything's trending really poorly when maybe it's just directly on track. One thing that I think some of our clients have really appreciated with that recently, we didn't have this 18 months ago or whenever it was that we worked on Facebook ads before, but you probably noticed that we have this now with PPC, where we have that lead feedback database where you can gather like really objective data about like what leads fall into what categories. Because then we can look at things, right? Because what I've noticed is the kind of feedback you get from acquisitions teams is stuff like, oh, like most of those leads are out of my market. But when you look at the data, it's like, well, actually, it's like 10% of your leads, or most of those leads are spam. And it's like, okay, you had like 2 spam leads. You just remember those ones because you were upset about them. But it puts it into like really concrete numbers. So there's no emotion involved with it. And then you can put those numbers side by side with companies that are further along. Like you talked about, like the behavior, like those early stage, I would call them like leading metrics.
Sure.
So you can look at those, right? And you can see, are we getting the right number of opportunities? Are we getting the right number of appointments and all that kind of stuff before measuring for those later outcomes like deals and stuff like that? I wonder if we had that in place when we worked together 18 months ago, if that would have made a difference. Just because then we could look at it really objectively, like, is our lead quality bad, or are we getting that feedback from the team that it's bad when it's actually really normal and these metrics are all trending exactly where we want them to be?
100%. And yeah, it's just spot on, because I am by nature, I'm an emotional person, right? I just am, right? But I'm also a numbers guy,
yeah.
Right? And I'm also a numbers guy. I love numbers. That's like, and I'm not good at like high, like not business calc and none of those. I don't know any of that stuff, right? I don't know. But you show me a P&L, you show me KPIs, and these things make sense, right? And when you have these things, you're able to make unemotional decisions, and you're then able to lead the right way, right? So that goes back to your numbers have to be right. And these aren't crazy numbers. You look at my Excel sheets, like I'm not running like crazy pivot tables or anything. I just know what my ROI is, what's my cost per lead, what's my cost per deal. You know, the basics, and you need to abide by those, as opposed to, you know, say, hey, well, I see what that's saying, but I feel a different way. Well, you're wrong.
Mm-hmm. I think the reference point also matters a ton there, because a number is just, I mean, you could say like 20% of your leads are coming from out of your areas, right? And depending on, like, who's to say that that's bad or good, right? You need to know like what's normal. What is a normal percentage to be like that? So that's where, like, I think one of the conversations that we had before earlier on was like in that 18 months ago or so when you were running the Facebook ads, it was something along the lines of like, this percentage of my leads in my CRM are dead, or it was something along those lines that you were looking at, where like you saw those metrics like that. And I was like, oh, I don't really have a problem with that because that's actually really normal. But if you don't have the reference point, that's where I think like working with a partner that kind of knows what the reference point is and which reference points lead to the right kind of return, like having that idea of benchmarks is really valuable, because you can look at the numbers and the data, and someone could look at their cost per lead and see my cost per lead is $200 and freak out because they're paying way too much per lead. But maybe that's like completely normal and it's exactly what they need to hit their goals. You get what I'm saying?
Yeah, spot on, spot on. And if you base that, like you're back to what you said earlier, if you base that decision off an acquisition agent who may have just gone to 3 really bad leads in a row, you're going to make an emotional decision. You're going to say all of Facebook sucks because the last 3 leads we got were robot or automated robot leads or whatever. So yeah, and like you said, you need to know what a benchmark, you need to have a benchmark, a market benchmark that you're kind of going against. There's no question.
Yeah, that's where's your source for benchmarks? How do you know if your numbers are good, if they're bad, everything like that?
So I'm in a few groups. I'm in a Tiffany High's group. So I kind of have some benchmarks based off her. But my biggest one is cost per lead. Like that's like, that's the one for me. That's like, if my cost per lead is so-and-so, I usually kind of feel pretty comfortable with things, to be honest.
It's a good leading metric because it happens pretty immediately. And then if they're real leads, they'll close at some rate, right? Over time.
Yeah. Of course, I'm looking at usually. So I usually disqualify my gross leads. So I'm always usually going based against my net leads, right? So not people who like dead wrong or blatantly angry. So I'm usually cutting those out. And then from there, I'll look at what's my cost per contract sent, right? And I know based off our fallout rate as a company historically, what percentage of contracts turn into contracts executed. So I'll use historic data, but leading indicators for me are contracts per lead, cost per lead.
Yeah, absolutely. So it sounds like what you use, and I'm a huge fan of this strategy. I like to advocate for using a combination between leading metrics and lagging metrics, because your lagging metrics are the things that everybody cares about, right? Because they're going to be people who will say cost per lead doesn't matter because ROI is the only thing that matters. But cost per lead's on the path to ROI. And at a given time, you have a lot more of a sample size for cost per lead than you do for your ROI, right? So what I like to do is use a combination between leading metrics and lagging metrics, where we have enough sample size for our leading metrics. And as you go further and further with the marketing channel, you can measure this further and further down. Like if we just started running PPC ads yesterday, maybe today our metric is, are people seeing the ad, right? Mm-hmm. That's as deep as we can get. We definitely can't measure ROI. We can't measure cost per lead, but over time we might get an idea of how many clicks do we get. And then we might get an idea of our cost per lead and how many leads we get. And then we might get an idea of qualified leads. And then after that, opportunities, et cetera. We can work further and further down this funnel. What I like to do is go as deep as we can with the sample size that we have, and then assume the rest. Like just know it costs me this much to get an opportunity here. And then I know that historically on average, we need 4.8 opportunities to get to a deal. So I'm going to assume that will follow.
100%. It's spot on. Yeah. I mean, if I'm forecasting something out, I'm going to forecast against what has historically happened in my business, right? But you cannot get there without first starting with behavior, which I'm just reiterating what you just said. But yes, there's levels to this, right? You can't, cost per deal is the most important thing. Cool. But not the first week.
Yeah. And that's absolutely my favorite thing. Because the other direction that people go, this is like the opposite problem. And I see this with a lot of companies that have just been around like a lot longer and they're a little bit more complacent with their marketing. They just know, because I mean, I feel like when everybody starts with their business, they get really neurotic about like their marketing numbers and stuff because they see it bouncing around all the time. And then at some point you get so desensitized to that, like the fact that you didn't get a deal from this channel this month or whatever the case is, because you realize it happens all the time and you become a lot more level-headed. But then people go really far the other direction and they just start like analyzing their marketing like on a yearly basis overall with stuff. And I would argue that's not right either, because those leading metrics can tell you things like, for example, let's just say today the cost of postage doubles. I don't need to now send direct mail for the next 6 months and then analyze how my return slowly shifts to understand that that's going to double my cost per deal. Mm-hmm. It's because there's a leading metric, right? Like one of those earliest metrics in the funnel is how many postcards do you send? And we saw that went down, right? So we can make those assumptions, but sometimes those same things happen in like digital marketing, for example, but people don't react to them because they just look at those end numbers and it could take a year to get there. right? But then if you look at the end numbers too short, then you're off. So that's why I
Yeah.
love that combination of like those leading metrics and then long-term numbers for the lagging metrics.
Yeah, that makes sense. I could see how somebody can turn in the opposite direction. That's interesting. I've never thought about it like that.
Yeah, it's a lot less common to go that direction because I think everybody skews on the side of being more nervous about their marketing dollars, not being more
Yeah.
chill about it. But we have some clients that go pretty far that other direction where they just buy and hold, which that's honestly usually my advice is buy and hold, but it's because I'm talking to people that are not buying and holding. They're like way too
Yeah.
neurotic with it. So usually my advice is like, be more like that. But then sometimes people go really far that direction, in my opinion, a little
Yeah.
bit too far. So anyways, that's why I think because what they've learned is things bounce around a ton, but the leading metrics you have a better sample size for, right? So you can kind of use a combination. So to wrap things up here, I appreciate your feedback on everything, Laz. It's been awesome. Do you have any closing remarks, any closing advice?
Constantly look for ways to optimize your business. And I'm not saying go after shiny items or shiny objects, however they call it, but just constantly be looking for them. I think it's a good, based off what Brandon just said, where you said, hey, you can go in the opposite direction where you think everything's fine and dandy until you realize it's not, right? But it's a push, it's a push and pull thing, right? Because on one side you want to get out of the way, right? And you don't want to always be moving things. The way I think about it with my business is, for example, my business partners is sometimes I'm bored and I want to go out of my office to bother them, but I hold myself from bothering them because now I'm getting in their way of being successful, right? So part of it is you need to get out of the other people's way so they can be successful. But like you said, the other part of it is still having an ear and an eye for problems that need to be solved because that's never ending. So just be conscious of both. And too much of one can affect the other and vice versa. So just be conscious of it.
Yeah, absolutely. I want to dig into one thing you said, and it was constantly optimize your business, but not in a shiny object way, or you said something along those lines. How do you know the difference between a shiny object and something that's like good practice to optimize in your business?
That's $1 million question. I kind of look at it as how well does it flow within what we're currently doing? Is it something that could be implemented into what we're doing without fundamentally changing our direction, right? So let's see, what's a good one? Novations. That's an easy one to say, right? Okay, I'm already getting these leads. I already have a lot of these leads. They fit the profile of what I do. The transition to solve the difference in solving their problem is relatively minimal. Let's add this in. Let's teach our team how to do this. Let's invest money and time in getting them to do this at a high level, right? That would be an example of something that's an obvious object to implement, right? But looking for things that fundamentally continue to go in the same direction as your business.
Yeah, I think I've learned a lot about this recently because my standard before was that I want return on investment on our actions, right? So I'd look at what are things where I believe that I can get more than what I put into it, right? Like maybe we implement novations and then now we're going to have, this certain amount of revenue extra compared to what we would have had before. But where that's led me astray is in some ways opportunities are like a temptation. And as you grow in your business, the level of opportunities that you have to start saying no to, they just get more and more tempting, right? They follow with you because when you're doing 10 to 12 deals a month, then suddenly now this new exit strategy is like even shinier, right? Because now there's so much more leverage and there's so much more that can be done there. But I've fallen into the trap before of just trying to do everything that looks like it's going to produce a return when you don't execute any of it well, or your team gets overwhelmed or whatever the case is. So for me, it's an element of like, what's the priority? And because there's a lot of things that have a good return. It's a question of choosing the one that has the best return. And that's how you make it not a shiny object. And I think a lot of times, like what has the best return is something that's really tangential to what you're already doing. And that's kind of how I'm wrapping this full circle to what you said. The concept of like novations, yes, it's a new thing, right? So you could say it's a shiny object in that sense, but the amount of effort that you're putting into implementing that versus the benefit you get from that is it's an extremely great ratio, right? Just probably better than most of the other opportunities.
Absolutely. And last thing for me on that is and also as a visionary, it is a discipline because it is literally my job to find new things, right? So it's a discipline because and I'm not here to say, because I'm not trying to say like don't watch a bunch of YouTube videos on what the newest guy is doing. You need to do that. It is your job to do that. It's just what you discipline, what you choose to implement and what you don't. But you need to know everything that's going on.
Correct. Yeah, you just have to filter it a ton, right?
Mm-hmm.
There's no
Yeah.
shortage of good ideas out there, or
Yeah.
ideas that'll be profitable, or whatever the case is. The secret is you'll never actually get anywhere with them unless you actually have the discipline to say no to most of them.
Absolutely.
So that's awesome. I love your perspective on that. Thank you for joining today, and for everybody listening. I'll see you next time.